Hey guys, Nathan again with StreamlineMortgage.org, and I want to take a second just to explain what PMI is. I get a question quite often about PMI. People are not sure what that stands for, what it is, and what it does for you. And a lot of times folks don't quite understand what PMI is, and they'll say, oh, there's no way I'm paying PMI. I'm not getting into that. But they really don't understand what the purpose of it is. PMI stands for Private Mortgage Insurance. Okay, and it's pretty well the dreaded term, around the industry when you're looking at shopping for a loan. But PMI is actually a necessary evil, if you will, for the housing market right now, and it serves a good purpose. Private mortgage insurance is an insurance that you pay, as part of your payment, that covers the lender for your mortgage. Now, that seems like, why do I need to cover the lender? The reason they do that is because when you have PMI, you're putting less than 20% down on a house. Now, typically in the old days, and we're starting to kind of migrate back to this, 20% down was the minimum that you had to have to buy a house. There wasn't any kind of subprime loans that were out there. 20% was what you had to have, unless FHA was backing the loan. So conventional came out with what's called private mortgage insurance, and again, it covers that difference. To get them back down to that 20% threshold to keep them protected with the loan. Now, you've probably heard recently that several PMI companies have went out of business because they had all these homes insured, and then all this foreclosure rush has happened, and they've several have just either stopped issuing PMI or have went out of business altogether because their losses were so great. But keep in mind, PMI allows you to actually purchase a home with less than 20% down. So if you're buying a $200,000 house, if you didn't have PMI, you'd have to put $40,000 down. If the FHA option was available, if you're wanting to go, the conventional route. So that's what PMI is for. Again, you pay it, it protects the lender, but it keeps you from coming up with a big chunk of money that a lot of folks don't have, especially in this economy right now. Keep in mind some things are tightening up with PMI requirements. You have to have some very good credit scores now to qualify for PMI. A lot of them won't go anything. A lot of companies won't insure anything under a 680 credit score or even a 700 credit score now. So, check with your loan officer on that, and they'll have all the details for you on how that works. But just want to give you a little information on what a private mortgage insurance was. I hope it helped you. And if you haven't applied for a loan yet, but you're thinking about it, please check out our website. It's www.streamlinemortgage.org. We do, home loans, purchases, refinances, second mortgages. Check it out. You can also see some of the other videos that we have on there with covering several, different topics throughout the mortgage industry. So thanks for watching, and thanks again.